Hi everyone, thank you for joining. Really excited about today's interview. I'm incredibly grateful for Corrado to agreeing on doing this. I know very well how tight your schedule is, so really appreciate
My
your time
pleasure.
and yeah, thanks for being here. Before we begin, let's start with a couple of disclosures I need to read. I'm the founder of Valora Investment Group LLC. Valora is a registered investment advisor. Registration does not imply a certain level of skill or training. This conversation is for general information purposes only. It's not investment advice, nor a recommendation to buy or sell any security, and not an offer or solicitation to buy anything. Valora and the accounts we manage own shares of Comstock. We therefore have a financial interest in the company we're about to discuss, and we may buy or sell that position at any time without notice. Neither party is compensating the other for this conversation. Corrado will speak in his capacity as CEO of Comstock. His statements are his own, and we have not independently verified them. Anything either of us says about the future is forward-looking statements based on assumptions that may prove incorrect. Having said that, Corrado, thank you for your time.
My
Let's
pleasure.
start it with like a general description about the company, brief overview for anyone that doesn't know Comstock already. Maybe that
Yeah,
brief description and 2-3 key takeaways you would like them to take from this conversation.
absolutely. So, Comstock is Nevada-based, Nevada domiciled corporation in the United States. We have properties in northern Nevada, primarily two sets of properties. One is an old historic mining district, which we have announced the sale of and are imminently looking to close on that, which is very exciting for us. It puts a very meaningful but historic chapter behind us as we move forward into renewable metals. The renewable metals business is also based here in northern Nevada, but it's about to extrapolate across the nation. And believe we are the largest recycler of solar panels with a zero landfill solution, meaning we recover 100% of the metals, 100% of the glass, 100% of the materials, and we resell all of them. And so that is really our foundational core business. It's growing rapidly. We are just getting ready to demonstrate the largest industry scale recycling system that we know of. Imminently, it's coming online as we speak, and we also have a real estate position in northern Nevada that is part of an entity called Sierra Springs Opportunity Fund, where we've consolidated thousands of acres of land, thousands of acres of water rights, and we have now enabled the capability to bring power to those sites. So the powered land equation is very valuable, and we're looking also to monetize that business. So to the extent that we're selling the mining assets and monetizing / selling those other real estate based investments, we look to continue to fund the more rapid growth of the industrial metals business.
That's awesome. As I said in my remarks, we are owners of Comstock and long-term owners of Comstock. We already visited your facilities, seeing both the demo facility, not the up and standing now commercial facility one, and the SSOF properties. So yeah, I can speak from firsthand how remarkable and yeah, exciting those kind of businesses are. I want to start with maybe some basic numbers and units of economics,
Sure.
just laying them out and you telling me if they're correct or not. But my notes I have, there are around 240 gigawatts of solar panels deployed in the US already, and 40 are being deployed each year. 1 gigawatt is roughly 50 to 70,000 tons in material. And that would mean that there are around 13 million tons in the US already deployed. Getting into the units of economics, the economic value per ton is around $1,000. You got 10 to 20 ounces of silver per ton, and then you got aluminum, glass, copper. All in all, would be roughly $1,000. And then you have $500 in tipping fees. That would be like a decommissioning liability by the developers of that solar projects. So all in all, you have 13 million tons. That would be roughly 13 billion in material value in the US in those solar panels, and then 6.5 billion in decommissioning liabilities, so roughly 20 billion on those numbers, and being deployed annually, $2 billion in material value and $1 billion in decommissioning liability. Then we get into your factory economics, which are $15 million in capex and $15 million in opex per year. That's very rough, but you're doing around $750 million in revenue from 500 in tipping fees and 250 in material value. And at 25% utilization, you are break even, and at 50% utilization, basically the investment has a 1 year payback period, which is amazing. Not to talk about if you ever reach 100% utilization. So the units of economics here sounds awesome. Please correct if anything was wrong. And then let's talk about your current operations and your expectations for expansion with these units of economics.
Yeah. So no, those numbers are very much in the ballpark that we understand. Very good. You know, there could be a billion or more individual panels, translating further what you just said. You know, in the United States already deployed, they tend to have a life of expectancy of 25 to 30 years, but they ultimately are having a much shorter practical life. Like we're seeing panels come out of the market anywhere from 15 to 17 to 18 years, which is much faster than people thought. So it's still an early phenomena, but the panels are now coming out of the market, and quite frankly, they caught a lot of the utility companies and the independent power producers by surprise. It was probably the combination of the shorter life with such high, strong demand for electricity, right? Pushing the repowering and pushing the replacement thesis much stronger, much faster, much more motivated. So we do see that, and 3.3 million panels, assuming a weight of 50 to 60 pounds per panel, 3.3 million panels alone is 100,000 tons. So one of our facilities looks to do in one production line 3.3 million panels a year. And that 100,000 tons, equates to the numbers that you talked about, in terms of revenue and profitability. The 15 million of capex obviously is one time, with 15 million of recurring operating expense. So the return could even be faster than a year. So it's just a question now of, getting the first one fully up and running. It's going spectacularly. We feel very good about the whole process. Getting a panel fed in the front end, coming out the back end, that is exactly where we're about now. And once we do it, a few times, we will publish it. And I know people are waiting to hear that, and it's imminent. I think it's imminent. So it's very exciting. Then the idea would be, because, if you spend 15 million a year and you are producing close to 100,000 tons, your cost per ton would be closer to $150 a ton. Obviously, if you're producing 50,000 tons, it'll be somewhere closer to $300 a ton. But in all scenarios, it's very, very competitive, right? It's very profitable. It's very exciting. But logistics alone, the logistics cost alone would blow that out of the water. I mean, you could spend, $150, $200, $300 a ton to ship something across the country. We don't want to do that. Okay. So the reason we located ourselves in Nevada first, and maybe even Nevada second, right, a facility in the north and a facility in the south, is that we see a lion's share of these end-of-life panels coming out of the southwest region of the United States. So California, Nevada, Arizona is where we see most of these panels coming to end of life. And if it's a very short logistics, often the tipping fee, our customers are dropping these panels off, paying us the tipping fee, and they incur the freight. So very often.
Okay, that was one of my questions to ask today. Who incurs the freight cost? It's the customer?
Yeah, so well, the answer is it depends, but mostly in these short freight scenarios here on the Southwest region, it's been essentially tipping fee for the delivered material. So we're not paying. Right? Now, having said that, there's some very large customers, Indiana, Ohio, Florida, where we're keen to be located there in the future. We're not located there now. So there are some cases where, we've negotiated some of that freight, or we've incurred some of that freight. But we consider that a temporary condition, right? Because we're building market share and we're located on one side of the country. but we want to build market share for the whole country. And then ultimately, the idea would be that because these are efficiently deployed facilities, we could deploy 5, 6, 7 facilities in the key locations where solar panels are concentrated. So Texas, Florida, North Carolina, Pennsylvania, Ohio corridor, even ultimately Minnesota. These are the places where we see the panels mostly concentrated, in addition to California, Arizona, Nevada.
And given the stellar economics that you're seeing per factory, there are both sides of the argument. Some people would be complaining that you're not expanding fast enough, and some people are complaining, hey, take your time and let's build the first one first and seeing it commission it and fully utilized. So
I
what's
think
the
yeah.
what's
No,
the avenue you're thinking on pursuing
yeah,
with regards
yeah,
to expansion?
yeah. So I think there's maybe 2 or 3 points there that are valid. In one case, this first facility is first of its kind. Okay, so absolutely, a meaningful part of the opinion is let's get the first facility up and running. Let's make sure it runs properly. Let's validate the unit economics. Okay, and then start to ramp it up. And so it's very logical to do that. Okay, um, you know, and for those who really need to say, show me the money, prove it, that's important. We believe that's important anyway. Like we want to do that too. I think the hybrid or not a compromise, but the injection that really is the win-win is we're out selecting sites, we're out securing sites. We even start the permitting of sites, which tends to be the longest lead time item, you know, but not make the purchase commitment to deploy the next production line until we've satisfied ourselves with the efficacy. Now, we may satisfy ourselves a quarter before the market sees it, okay? But, we still have that discipline. I think we feel like we want to have, good discipline and be very careful in deploying the capital. To your point, once you're at 25% utilization, then metals no longer is a use of cash, right? It could be neutral or it could be a small source of cash. Okay, then that's very important to us, as an enterprise. Then we can start moving, to deploy now a proven solution in site 2,
Okay.
3, 4, 5. Yeah.
You've already operated your demo site for 2 years, and it's a valid concern by other people that's saying, hey, usually when you're scaling 20x from 5,000 tons per year to 100,000 tons per year, you will encounter lots of unexpected issues. Can you speak to the learnings you had in these 2 years, and what are your expected issues you will probably encounter and how to mitigate those?
Yeah, very good question. So I think when you're dealing with solid material flow, a 20x scale up, 10, 20, even 25 is very conventional, right? It's not aggressive. It's exactly, if we planned it, intentionally, that's exactly how we did it. That's exactly how we'd want to do it. So we feel 20x is okay. But it's more than that. It's better than that, I think, for us, because 2 reasons. One is, the core of this solution, the core of this production line, the core of this technology is the thermal process in the ovens. And our president and, our chief technologist really, has been working with ovens of similar applications of similar scale previously. So for us, the oven process was a known technology. It's proprietary. It's a trade secret, but we know it, right? Like
Okay.
we know it. So there's less anxiety there. The second thing is the crushers, the shredders, the separators. They're the ones in the demo facility are the same brand, and the
Okay.
same company. They're just bigger sizes, but they're not first of a kind bigger sizes. Of course, we tweak the designs and we modify them slightly, but we feel is very good. So really, the biggest risk is the integration and it running contiguously, right? Just continuously running, continuously running. That's why we've taken such careful discipline at stress testing first every part of the process, and then stress testing the connective parts of the process. Probably the newest thing was the automated loading with the robotic arms, right? This was very, very critical to us because we want to be constrained. We want the ovens to be the constraint. We want the ovens to run 24/7. We want the materials to be flowing 24/7. For that to be true, we needed to be able to load panels every 7 seconds, and create enough capacity on the front end so that we would never be waiting, to feed the ovens. And so it was a big breakthrough, not breakthrough, but a big achievement for us when, we ran those arms, loading 2 panels at a time at less than 14 seconds. That puts us at a panel every 7 seconds or better. So I think we feel very good about that. What the bigger thing that we're attending to, this would be more conventional, more normal, is training two shifts. We're going to run 2 12-hour shifts, training the operating guys and gals, training the engineers, making sure that running the bigger system continuously is done by, knowledgeable, competent, capable workers, and all that is happening.
How far along are you in that recruiting process of human capital?
Very far, like 90%. Like we've got the people on board, we've got the people trained, we've got people working. They've been commissioning and testing at the same time, right? We haven't run it continuously yet. That's the last step, and we're very excited to be just about that. Now,
how many operators does the line need?
So it's remarkably low labor intensive. Technically we want 3 people on the logistics and loading side, 3 people on the unloading side, so that's per shift. But there's ancillary logistics, there's storage, right? There's some engineering. So, the whole plant could be 30, 35 people at the end of the day. It's not a lot, right? But that's running, that's 2 shifts running all the time, 7 days a week. Yeah.
Okay. And expansion does not only mean more factories, but could also mean expanding the material value that you're recovering from panels. So we covered the future factories expansion plan, but you're also endeavoring into improving the material value you extract from the panel. You have initiatives with getting more value out of the glass, also the silver. Can you talk about that? And can you specifically dig into the units of economics? I know they're unknown, but how much are we investing in research and development? What do we expect to solve?
Very good. Yeah. So I think just maybe first to say that, we get paid up front. You made that point already. $500 a ton is sort of our target. It's held up over the last 2.5 years.
Yeah.
The demo facility, one thing I was going to say that I forgot, the demo facility's claim to fame is it allowed us to put every single type of panel through that system and get clean material out the other side. So even though we understood the ovens, we understood the technology, we didn't understand solar panels as well, right? So 2.5 years of just running every type of panel, every type of composition, every type of kinetic, every cycle time, that's really what the demo facility did. And to your last question, having, 8 people that could transition from the demo facility into the large scale facility has been a huge blessing for us, a huge blessing, in the training and developing of the rest. Okay. Now, we feel like we've been a leader in establishing this market, including highly educational, to the market, to the customers, to the regulators about the negative economic impacts of these things going to landfills. It's probably important to say today, still, we would guess 85-90% of the panels are either going to landfills or just being shredded, for bad end. Okay, so very bad environmental implication. So we feel like a good job has occurred in people truly understanding these are hazardous materials, truly understanding their environmental liabilities, and hence paying us to eliminate, extinguish, these liabilities, not mitigate, not manage, eliminate. So the peace of mind that we deliver is an environmental service to our customers, and it's very valuable, and hence, we get paid to do it. On the flip side, you said, the theoretical or potentially $1,000 worth of materials. We think the number's higher than that. Okay,
Yeah.
but that's a good place to target. Okay, today we're only getting between 125 to $200 for a portion of the silver content. Okay, that's because we don't refine those industrial tailings. To your point, though, we are developing a metal extraction solution that will pull from those tailings. So say you have a ton of tailings, can you pull 1.5 to 2 pounds of metal? That's what we see in there, 1.5 to 2 pounds of metal. Much of that is precious, right? With silver, you pull out silver, pull out the copper, pull out the rest of the metals. It will change dramatically, right? The economic stream of this supply chain. It'll change dramatically the competitive nature of our solution. It will change dramatically the reliance on tipping fees. Even though we feel they're well established, there's always a risk that they decline a
Yeah,
bit.
absolutely.
So,
It deepens the
just
moat. It
de-
keeps competition at arm's length. I agree 1,000%.
yeah. So the
But how
de-risk
much?
aspect is just really powerful, and we accelerated that. Like, so there's been some debate about, okay, well, it's supposed to be June, now it's August, like, why are you delayed? But the truth is, we fully deployed glass upgrading, which is another thing you mentioned. That's up and running, right? That's ready to go, and then we're very far down the benching and pilot testing of the metal extraction solution. We want to get silver out first. The
Okay.
complexity of this solution is twofold. One, there are a lot of different metals in there, and often in small quantities. Silver, larger quantities, copper, smaller quantities, and then some others, very small quantities. We want to get all those metals, and then the remaining silica, which is glass, silica, sand, we want to do it in a way that all of those materials are resold. So
Okay.
right now we're saying we're zero landfill. That's true. We're selling all the materials. That's true. Now we want to maximize the value that we get for all those materials, but not in a way where we create a,
Yeah,
a, a hazardous material. We want to be able to have
absolutely.
all the materials out. So
Ca-
get the materials out in sequence properly, silver first, and then B, ensure you do it cleanly so that they're all saleable. And
Can we
we
can,
get to the
can
end
we
of the
double
year.
click on the economics of this? I think you invested 1.5 million into the glass recovery.
Yeah,
How much would this increase the value of the glass that we're getting? And also, how much are we investing in silver for the
yeah,
pilot?
yeah.
And what's the
Good question.
expected value we could, like, what's the
Yes.
return on investment on these
Yeah.
investments?
So the glass first, right? The glass has a dual value, one defensive, one offensive. The defensive one was 70% of the solar panels is glass. So I did lose some sleep. I usually don't lose sleep. I lost some sleep when we were still working on offtake for glass. Okay, and we found some offtake at lower end values. Like, so if you don't find offtake, you're going to drown in a mountain of glass. You're going to die. Like, you can't. There's no business model if you can't sell the glass. Okay, so the first objective was selling glass to as an additive, right? The clean silica, the clean materials as an additive. It could be an additive for concrete and cement kind of applications. You can get 10, maybe $20 a ton, for that application. But that's the de-risker. To be able to actually find people willing to take all of our material was the first. It's not a grand slam, but we feel like it was a big win, a big home run. Okay.
When was this achieved?
5 months ago, like 6 months
Okay.
ago. Yeah,
Okay.
we've been working very hard on it. Then, though, in those engaged discussions, we started to talk to not more sophisticated companies. On the contrary, very all sophisticated, but different higher applicative uses of this glass. Using it for ceramics, using it for even fiber optics. All different types of applications for glass. These people had a much higher specification. Now we need the glass to be absent of contaminants. We need no metals. We need no dust, right? And so that's where we deployed the $1.5 million. We deployed the $1.5 million so that we could treat, remove metals, remove materials, clean off dust. And now you've opened up the door where, you could be selling this glass for 30, 40, 50, 60 more per ton. However, these are large companies and they have large supply chains and they need large material flows. So getting certified and spec'd out was very critical. But then the next step is, we don't want to buy 1,000 tons from you. We want to buy 50,000 tons from you. So that we have to get the machine up and running and operating at a much higher level before we start supplementing those higher value sales. So the good news is we're going to sell it all today. The good news is we're going to sell it all at a higher price tomorrow, right? But that's an evolution that will occur over time, tied to the speed at which we could ramp up the throughput, the speed that we could ramp up the flow.
Will you still be selling your tailings, or will you be processing most of them in-house?
So it's so funny that you say that, because there was a debate like this week, so the answer to the question is, if we don't know that we can extract silver and other metals, then we must sell the tailings. Okay. If we now feel that we can extract the silver economically, feasibly, profitably, we prefer not to sell those tailings. We prefer to hold them until, the pilot's up and running. Then we're going to process only a ton a day, but it's still meaningful in value. Then we get up to 25 tons a day with the demo facility. We'd rather wait and process our own materials. So that doesn't mean we are waiting. That doesn't mean we aren't selling them now. But once we have clear line of sight that we can extract those metals ourselves, especially at low volume levels, it's not liquidity wise, it's not that material, right? We would rather preserve the higher value for ourselves. But so that's not a final decision. That's a thinking process that we're going through right now.
Okay, interesting. I'll have to adapt my models then.
Yeah.
You're a big fan of the theory of constraints. You've done TED Talks on this, and super focused on the slowest moving part. That's the one who determines the velocity, the speed of the whole system. What would you say is the current constraint in metals right now? Is it the oven, or is it the feedstock? Is the velocity at which solar panels are coming out of the market, or the velocity at which policy is being implemented? And
good questions. Yeah. So I think just technically, if you're looking at the system technically, where the slowest part and where we would want the constraint to be is the oven. Okay. Yeah. That's where most of the value is created. That's where the contaminants are eliminated. And it's also the slowest part, right? Technically, that's where you would want it. So we call that the constraint. The oven's the constraint. Okay. Now, the first thing we do is what are the critical interdependencies to the constraint? Like if a robotic arm breaks down, throughput stops or slows, that's very bad. Okay. So once you think systemically, once you understand where the constraint is, the goal is for the oven to run 24 hours a day, 7 days a week on the best possible mix of material flowing through. Okay. So that's the constraint. Now, we use a different term. Some people use the terms interchangeably, but we don't. A bottleneck is something that's slowing you down and it shouldn't be, right? So we would call it like an artificial constraint, or the bottleneck is something that, either because of circumstances or because of bad planning or mismanagement, something's blocking you that shouldn't be. Something's slowing down the speed that you generate cash shouldn't be. And today we would say that the rate that panels are coming out of the market, and I would say that's not correct. I would say the rate that we're capturing the panels
Yeah.
coming to the market needs to increase. It is increasing. It's been increasing for the last two, but now it needs to increase. And we've done all the, I feel like we've done all the right foundational things in terms of educating the market, communicating the thesis, getting certified, having agreements with the largest customers. Okay. But now we kick in from one gear into a much higher gear. Marketing and sales, panel flow. We do not want to be constrained by panel flow. On the contrary, we want to be overwhelmed by panel flow, right? So that's the next, we, a lot of our capacity has been encumbered bringing the machine in line and developing these solutions, which are critical. Okay. But now we're spending more and more a proportion of our time in building the market and channeling those panels to us.
Okay. Okay. You said maybe the constraint is not that the rate at which panels are coming out of the market, but the rate at which you're being able to capture them.
Yeah.
So how big of an issue here is policy, and what's the direction you're seeing it evolve? How essential is policy in order for your business case, or could you make a market-only argument for
Yeah,
the existence of?
that these are great questions. I think so. I think policy can play a dramatic, exponentially growing impact in the future. So we would say it's important that the federal government and or more of the states adopt the same provisions that we see in like California or coming online in Texas, or even now recently in Pennsylvania, right? So like good policy about how you classify solar panels as a universal hazardous waste. These are very important things to be designated, because today the loophole is, companies can dispose of these things in landfills as if they're solid waste, or scrap and ship them overseas. Now, often even then the practices are gray, they're shady, because they're mislabeling. Yeah.
And they need better enforcement on that side. But there are
Better
a couple of
enforcement.
optimistic points coming out of, like, I think California issued like a $13 million fine for someone who was trying to dispose and save $4 million. So
Beautiful. Yeah, we're seeing those things. The trend, I think, is our friend. It feels slow. It feels like it could always go faster, but the trend is our friend. I think the other part of it, though, is, and I think I'd like to highlight this. Like, in the first 2 years of the business, we're now beginning the fourth year, but in the first 2.5 years, we had a demo facility. Some of our competitors had acquired a Chinese designed system that was comparable in size to our demo facility. And so there was this perception in the market that we were all the same size, or that we all had the same capability. I can tell you over the last 12 months, that perception has changed dramatically, but we're still not up and running with the big machine, right? We will be very soon, very quickly, but we're already seeing the competition fall away as legitimate recyclers. Yeah, we're seeing your biggest customers say that these companies are not able to do what they said they were going to do, and then they come back to us. But once we get the big machine showcased, I think that's also going to have a meaningful impact on people's validated views, right?
I
Perceptions
agree.
and disciplines.
Absolutely. Seeing the thing up and running
Yeah, it's big.
changes things. But it's good to see some initial evidence of this working. Congratulations on signing Illuminate USA. And it was my understanding Illuminate USA was working with your biggest competitor, Solar Cycle. I mean, it's all out there. Solar Cycle put it out there. And now
Yeah.
you came in and took this contract. First, congratulations. And then anything you can speak about this contract? Does this have like minimum guarantees? You take panels at spot? How does this kind of contracts work?
So it's interesting because they're an OEM, right? They're an assembler and seller of solar panels, okay?
Hmm.
And and that's not the largest market segment, but it's surprisingly steady. It's
Yeah, I
probably,
mean it's 40 gigawatts per year of new solar panels. If
yeah,
1% is scrap rate, you're at
yes.
20, 25, 30,000 tons per year just on scrap rate for manufacturing. So
And
yeah,
I can tell you just in the last 12 weeks that I just looked at, truck shipments and flows, that they're steady Eddie. Like we're getting
yeah,
the same amount of stuff every week, so we like that very well. I would say that it's interesting because there's some confusion about Solar Cycle here because Solar Cycle signed a very big agreement, with Illuminate to supply them clean glass for the manufacturing of solar panels. And we wish them the best of luck on that, right? Like, we don't know when they're going to produce glass, but if they do and they want to sell it to Illuminate, that's great. We are clearly in a different business model. We want to take the waste and recycle
yeah,
the waste for productive
yeah.
use. But we now have their business for that, as you said, and it took not to be shy, right? It took like almost 18 months, and
The
we've
sales
been
cycle?
yeah, and we've been running
Okay,
6 months now. And the reason it took 18 months is they had a very strong, multifaceted relationship, with the other,
okay, okay.
so
I want to put you in front of Canadian Solar CEO. It's my largest position, and they produce 10 gigawatts of solar. I'm
oh,
sure your salespeople are all over that, but yeah,
yeah,
hopefully we can
well,
make it happen.
we're all over everyone. In other words, we know they exist, but any
Mm,
help we can get to get to the right
absolutely.
decision maker accelerates our business without
I
question.
can
Yeah.
I can imagine. So yeah, coming back to the competition question or topic, I was fortunate enough to go to RE Plus conference last September. You were there, we met, and most of your competitors were there. I got to see firsthand how ahead you were and how they knew very little about the problems they will encounter, and yeah, how the differentiation you have between them. They all had the same system, they all had the same specs, they all had everything that you said. I was able to corroborate there. It was beautiful.
Yeah.
So, can you briefly say, like, what's your right to win here?
So if I understand you, like first and foremost, I want to make sure, like for the right context, this is still a very nascent industry. We're building
Absolutely.
first of a kind systems and we're integrating them industrial scale, ultimately globally, but like, industrial supply chains of significant size. Okay. So we have a lot of background, both myself and Fortunato, on industrial scale materials, renewable materials, hazardous materials, et cetera, as a business concept, not as a technological concept, number one. Number two, as a technology concept, we're very disciplined. The thing I loved about Fortunato when I first met him was our alignment on the discipline moving up to TRL scale. Honestly, when I understood his background with these furnaces, I was like, why don't we just build the industry scale first? And he says, we've never processed a solar panel through that machine. So so 2 years of putting solar panel, every type of solar panel we could get our hands on through that system, was extraordinary development. Okay, not trial and error, development, right? Like we knew the outcome, but then the kinetics, the delamination, the depolymerization, the deconstruction of these contaminants, the way that he calculates energy at the molecular level, right? The way that we have precision on the not negatively affecting the metals while fully eliminating the contaminants. That's our right to win because it's
Okay.
not only chemistry, it's not only validated, it's not only effective, clean metals, no emission, it's efficient. It's very, very efficient. Okay. And so,
Could you put that into numbers versus what you're seeing from your competitors? Like, where's the efficiency coming from? The OpEx, the amount of heat
yeah,
used, the
yeah,
time it takes?
yeah. I think three things, right? And I think it was genius, right? Because we don't talk about residence time in the oven. Could it be 2 hours? Could it be 3 hours? Could it be 5 hours? We made it irrelevant, right? By his design of loading a panel every 7 seconds and unloading super sacks every few minutes, okay? Like that a number of hours of work in process is irrelevant. And it's even less relevant because we get paid to take the material, okay? This speed, loading and unloading on seconds and minutes bases enables the scale of 3.3 million panels a year from a $12 million capex. Okay,
Okay.
that's number one. Number two is our totally variable costs are just basically limited to gas and electricity. I mean, gas and electricity is easily 92 to 94, some kind of number like that of our totally variable cost. And if that number is less than 7% of our revenue, it is a very, very low variable cost. So you have speed and you have efficiency. The third thing is the labor.
Okay.
Like it's very low labor. Now we don't know about our competitors, right? Because if you want to use solar cycle example, we know little, but what we know is they say they're going to do 100,000 tons in Georgia. They say their facility is 250,000 square feet. Okay, our production line, which can do 100,000, takes 30, 40,000 square
Okay.
feet.
Yeah.
Like it's something's
Yeah.
disconnected there. Okay,
Okay.
so low capex, low variable cost, high speed, low operating expense. That's a dream throughput model, right? Now we got to execute, we got to enable it, we got to build it up, we got to scale it, and then to your point, not only, we're already looking at higher uses of the glass, even higher than what you and I talked about before, right? And then we're looking at extracting the metals to get, even higher values as well there. So we really think that this backbone of high speed solar recycling is foundational, but we're starting to see this become like this global industrial supply chain and global industrial material business, you know.
I mean,
Every
at scale, that definitely is. I mean,
It's
solar
extraordinary.
panels are like 10, 20% of the whole silver demand. So if you're
It's
able
it's
to do circular economy there, that's,
it gets you there. But
yeah.
then you're talking about applications into all glass applications,
Yeah.
into cement and concrete and infrastructure applications, even porcelain. There's a
Yeah.
number of product lines that, intelligently come out of this. And we're just very pedantic about the chemistry and the material science. If you're not, you can't get 100% reuse. It's
O-
so much easier to get to 90, 92%, than to get to
Okay.
100. It's a huge leap, right? That last mile.
I'm a huge fan of the metals business and here for the road. Let's move on to SSOF, Silver
Yeah.
Springs Opportunity Fund. Again, as I said, I was able to see it in person, so I know what you say when you say we're right next to Tahoe Reno Industrial Center. That is huge. We even have better community support here. The bureaucratic process seems to be easier than in Tahoe or next doors. We have 2,500 acres there that a vast majority of that could be destined to data center development, and you secured 300 megawatts of gas equivalents and maybe an additional 900 megawatts that are coming up
Yeah.
in the couple of months. Let's start with maybe giving us some context how this opportunity, briefly, how this opportunity came, it evolved, and then putting in some numbers of what seems to be the reality today, many maybe comparable transactions that happened in the past, or what would be the expected average selling price per megawatt, per acre, per whatever unit you want to use.
So it came about because we had consolidated over 10 square miles of real estate here in northern Nevada with the mining district. And we were straddling two counties. And one of the counties was saying, hey, you should come and look at other properties, right down the road here. And we did acquire just a couple of parcels, like industrial, like commercial land. It was really not in our bailiwick. We were doing it in a positive way. We did it at very, very, very low prices, but it wasn't really our thought to be developers of these kinds of lands. And then the opportunity zone laws were passed, and the area was designated an opportunity zone. And that allowed us to set up a new company and raise independent capital, and then we started consolidating. It's like we tore a book out of the Comstock playbook. We consolidated the whole district. Could we consolidate enough of this land position to do something very meaningful? And at that time, we did not think about uh, data compute. We were thinking a little bit more clean industrial, like solar panel recycling, those kind of things. Um, and then the gates just
Okay.
opened up, like Switch showed up, and then Apple, and then Microsoft and Google, and I could name another dozen. They're all present. The aggregation is extraordinary, and we're probably the least best known. Everyone talks about Virginia, everyone talks about Texas, but when people drive through here and you've seen it, they're
Yep.
like, I had no idea. This is incredible. Now, as good as that was sounding, then success created a new problem, right? With all this power being consumed, then the grids got tapped out. National dilemma. The grids got tapped out, and we were caught in a, the local utility is required by law, right, to provide the power, but it takes time, right? They were behind. They got bottlenecked themselves, and remarkably last year, Southwest Gas stepped in, with an open bid development project, and all the big guys jumped in, and somehow we jumped in and got a piece, right? Like so
Okay.
that we feel blessed that we were part of that. But then it also, like you said, that was 300 megawatt equivalent, but then it put us in the front line for the next one. So 300 megawatts by 2028, another 900, maybe 1200, for 2030. Now you have, I don't know what the term is. You have hyperscale, you have big scale. You're in, all the biggest people would be interested in this kind of a project, and
Yeah.
because
And
we're
maybe
still,
only the biggest, because those are the only ones who have the wallet
it,
for it.
yeah, it could be well. So, and what's evolving is the biggest might be interested in the core nucleus, maybe 800, 900,000 acres, but then we have a lot of other, then you start
Yeah.
getting smaller projects, et cetera. It's getting very exciting right now,
Yeah.
and
I know you probably can't comment on it on this much, but what's the price of this asset? How should we think about value being unlocked as we move through the steps
yeah,
of
yeah.
securing more power? Yeah.
So there's two theses. Some people who still think about acquiring land and developing land. Of course, the land values are much higher,
Hmm.
but some people are really just interested in the megawatts. And of course, there's got to be land to develop on, right? But it's the powered land more than the
Yeah.
land. And in some cases, they're paying by the megawatt, like not by the acre,
Hmm.
right? That's the
Hmm.
thesis. That's the generator, And so when we look at comps, you know, um, I mean, 400, 500, 600 million, for the powered land thesis is it's out there. Like we see
Okay.
that out there. Like do look, we also have an airport, we have some residential properties. So there's always with us a little more complexity, but we
Hmm.
handle that complexity, right? We have the trust of the community and the county, right? And so we just feel like we're in a very good place to see this thing through. And
Okay.
our ownership now is almost 50%, so
Yeah.
it's very, very, very material to Comstock.
Can you help me understand the customer profile here? Who's the data center builder? By when do they expect to have a data center built? And walking backwards till today, like when do they need to have the generators there? When do they need to, for
Yeah.
our interest, to acquire the land so that they can get their generators in there? How do their timelines work?
So 20 November 2028 deliver of the pipeline, right,
Hmm.
fits very, very nicely, to develop capacity for 300 megawatts. The bottleneck there, this is not a bottleneck. It's the first obstacle is selecting the right buyer slash partner slash developer. Okay.
Okay.
There's no lack of demand there. Okay. Number one. Number two is whatever your power generation solution is, the lead time for that type of equipment. If people use gas turbines versus fuel cells versus other solutions. Okay, so we're locking all those things in, right?
Is Comstock locking those in or together with the
We
buyer
locked
acquirer?
we locked in the pipeline for the gas, okay, that we've said
Hmm.
publicly. The rest
Yeah.
of it, we don't want to lock in. We want to tee up, right?
Okay.
So letters of intent, letters of interest, term sheets, because ultimately the buyer is going to dictate what those solutions are,
Sure.
but we're
Yeah.
making it as easy as possible for the
Okay.
buyer by
Okay.
by trying to get as much ready as possible.
Okay. Okay. Awesome.
Yep.
There's a lot of chatter in X that the reason that directors have been buying so much stock is because they see the value in SSOF. I wanted to ask if there's any merit to this, or if maybe directors have been able to be strategic to SSOF. I don't know. Anything you can comment on this,
Well,
just to.
I think that look, we got three new independent directors, right, representing, two of our top five,
Yeah, investor base.
investor base. They came in, as they should, skeptical. They came in, diligent. They came in independent. And I'll tell you, it's been great. You know,
Awesome.
it's a lot more work and it's important. Okay. And so I know three directors have bought, Steve's the most, but like there's been two other directors that have also bought. I don't want them to
Yeah.
get lost in the shuffle. And then and two of the buyers were the new guys. One was the original guy, and then we've been buying, So I think no, I think look, you could read into it a million gazillion different ways,
Sure.
but like it can only be positive, right? I don't
Okay.
see how
Okay.
it can
Yeah,
possibly.
board alignment is something that
Yeah,
we've been speaking
yeah,
about like for over a
yeah,
year
yeah.
now, and
No,
I'm
it's
super pleased with the progress we've seen there. So,
yeah. Well, we can
yeah.
talk about other details, but the value
Mm.
that they're injecting from real estate to from legal, financial control, cash, like it's been fantastic. It's been
Okay.
it's been
Okay.
very engaged, like very substantive too.
Okay. Just to wrap up the SSOF thing, are we waiting for the actual power to come up to do the sale? Is that like a value enhancing thing that we might have to wait for, or there's no constraint regarding timing on when we could actually sell?
Um, there's we could start marketing tomorrow, right?
Okay.
We're just trying. We know what the buyer is going to be looking for, right? We know what the counterpart is going to be looking for. So we're trying to get as much of those things in place, fully vetted, et cetera, so that when we do engage, it's a smoother process, right? The
Okay.
processes take time. There's entitlement questions, there's delivery questions, all the things you mentioned, right?
Hmm.
They all need to happen. So.
Okay. Okay. Perfect. Thank you. Well, again, thank you, Corrado. I mean, we ran out of time yesterday, and we're doing a follow-up on Saturday morning. So, again, thank you
Outstanding. My
so
pleasure.
thank you so much for your time again. We now have to move to the part that the market seemed to like the least of the latest earnings call, which is Bioleum.
Yeah.
Bioleum is your renewables fuels division. It seems that it's taking a little bit longer for them to raise cash, and that there's a possibility of Comstock doing a bridge loan till they do. I would like to get more color on the possible size and terms of this bridge loan, and
Yeah.
what's the direction and the strategic outlook that Comstock is taking with regards to Bioleum.
Yeah, no, so I think first and foremost, strategically, the company has advanced so much, in the last 12 months. In the last 12 months, they were funded by third-party investors, right? So, I don't know that it was by design, but it really took a back seat in our focus because they were separated, they were a bit more independent, and they were funded and they had a very good plan. We were obviously very focused on getting metals up and running, extremely exciting as we just talked about what's happening there. getting Sierra Springs, where we did deploy some capital, right, to position it for much bigger monetization. And I think the focus was off of Bioleum a little bit, certainly from the market perspective. Also fair to say that when we raised our last two rounds of capital, it was extraordinarily, laser focused on metals, So I think it's correct. I think it's correct what people's views and people's understandings were. But one thing I would say importantly about Bioleum, after the money was raised last May, in 2025, they acquired RenFuel, which was the technology that allowed them to esterify lignin into oil in development, but very, very, very strong. And then also Hexas Biomass, which for a lot of people was a little bit below the radar screen, but it was actually a game changer from our perspective, like a massive game changer, because the ability to the ability to process waste wood, let's just say woody biomass, right? Into such high yielding fuels is really the core of that company. And because feedstock is the bottleneck in the industry, there's abundance of waste wood, so that, that you really debottleneck, you really solve the biggest, most important problem of the industry. This is why Marathon Petroleum was so interested and invested in the company, earlier in 2025, because it's a breakthrough on feedstock. Lignin is the key that we differentiate ourselves with. Having said that, as we started to look at how these supply chains are built, and you're now talking about deploying hundreds of millions, if not billions of dollars in biorefineries, okay? What does that supply chain look like? How reliable is that waste wood stream? How consistent is that waste wood stream, right? So, you can get waste wood from so many different places, forest residuals, lumber mills, pulp and paper mills. But do these lumber mills going to give you a 30 or 40-year offtake agreement? Is the pulp and paper mill going to give you a 30-year offtake agreement? The answer is it's very difficult, and there's a lot of variation. And it's almost like mining. The waste dictates where you go. You don't have a choice where you want to mine, right? You go where the resource is. It's the same idea, and it's very complex, and it has pervasive risks associated with it. Are they addressable? For sure, they're addressable. It's complicated. It's hard. It's less reliable, highly variant. So Hexas brings you the highest yielding, lowest carbon impact, stunningly lowest cost delivered to the biorefinery, pretty much wherever you want to put it. It's woody biomass, okay? You basically identified a grass. It grows like grass, it harvests like grass. It's super simple, but it's wood.
It's like a bamboo tree, right?
It's got, Wendy Owens, the president, is fond of saying it's like a bamboo stalk and a corn stalk had a baby, right? So it has no vegetables. It grows on marginal lands. It grows extremely high yields, and the better the climate, the higher the yields. And the way we like to describe it is if soybeans can produce the equivalent of 2 barrels of oil per acre per year, and corn can do 10 barrels of oil per acre per year, we're in the 60 to 100 barrels of oil per acre per year range, depending on the climate. You could be harvesting it once a year, twice a year. In some places, 3 times a year. It grows that fast. So it's just a huge breakthrough. And I think in a common way, in an expected way, it did take a little while to integrate RenFuel and Hexas into the system. That was expected, and it's great. Like the team is incredible right now. We have probably the world's leading lignocellulosic scientists sitting in Uppsala, Sweden, from RenFuel. That's only 3 employees of ours. That's our company, and sitting in Madison, Wisconsin. with the top agronomists for woody biomass growth in Washington State, right? So we have, and then we're working with the National Renewable Energy Lab, now called the National Lab of the Rockies. We're working with MIT, to develop these exact technologies, which is exclusive to us. So we feel like we have the platform. What was slower, Lucas, that I think was less expected, was our ability to, you spend, I guess, a decade, the founders, a decade or more, waste wood is their life. Like waste wood is everything. Waste wood is the thing. And we're saying, wait, there's a big breakthrough here where we like to treat waste wood opportunistically. We can process it, right? But we already have a feedstock that you can grow wherever you want at the lowest delivered cost, at the highest yield, at the lowest carbon score, that is already EPA pathway approved. Like the elimination of complexity and risk is remarkable. But it took a while for that thesis to, transition. And I'm going to tell you right now, I was very frustrated by it. Because for me, I'm a simple guy. I see a solution, I want it. Okay, like I don't have this emotional tie to the. So anyway, but that's all remediated now, right? We've locked and loaded, and we're moving forward. And I said it before, I'll say it again. Like I think we have confidence in the ability to raise capital. So to your question, I feel very comfortable to bridge what I now know is a very downsized, very focused, very aligned team for how many months? I don't know, 3-4 months, 3 million, 4 million. It's and we're going to do it as a loan. We're not putting more equity in. Okay. So the combination of that plus my confidence in raising the capital subsequently, right, will restore that capital for us anyway, right? So that's the judgment, the decision making we're doing, but it's not without implication. We've significantly everything I said to you about how Hexas de-risks us and repositions us also simplifies us. You want to deal with 27 feedstocks? Do you want to deal with 27 EPA approval pathways? Do you want to deal with the variation of every different type of wood? Yeah, great news. We could use any type of wood. Yeah, bad news. There's a lot of different types, right? So it's really a powerful advancement, and I wish, it could have been portrayed all so strongly, I'm trying to be absolutely, totally transparent in everything that we do. The only time we can't be transparent is when something's not public and ready for public domain, then we have to wait to make sure we say it properly. That's all.
But with regards to the current cash burn of Bioleum, you said it was a downsized team. How much cash are they burning per month or per quarter?
Yeah, I think that the target is like 600,000 or 700,000. So it's not a small number. It's not a small number, right? But that's where you get a $3 to $4 million, bridge. Should be sufficient, to get us to where we need to go. And coming back to the capital, I don't remember if we did talk about this, but the mining sale closes imminent. We had 30 million, over 30 million in the bank, June 30, bringing in another 20 million. Okay. We've spent the money on Sierra Springs that we wanted to spend. We targeted that 50%. We have everything in position. Okay. We've built the facility, the first metals facility. So if someone's looking at the last 6 months of spending and saying, oh my goodness, we can't sustain this rate, but that's not correct.
Yeah, I know.
Most of that was
investment
capital. That's beyond me.
And just to address this head on, there's been talks like some employees have left Bioleum and there's a lawsuit going on there. Is a possibility that this lawsuit impedes funding? How can this?
I don't think so. Move? I mean, I think we're So maybe that's one of the reasons why a bridge is more intelligent, right? Because it's not our intention that this lawsuit would persist. I can't speak to the specifics of the lawsuit, of course, but it's not something that we expect is a long thing, right? Like I think we're always in the notion of just resolving these things properly and moving forward.
Okay, perfect. And then just maybe do a quick recap of what you are marketing prospective investors for Bioleum. Like, what are the units of economics of Bioleum? What's the cost of the feedstock, the processing, the
Yeah.
selling price, the capex? What
Yeah.
makes Bioleum an interesting investment
Yeah.
for
The,
private
the
investors?
main, yeah, the main, and there's still some development going on, but the main differentiators, okay? First and foremost, feedstock is the bottleneck in the industry, right? Sufficient feedstock, which is renewable oils. Vegetable oils are the primary, source of that industry's, supply chain. We solve it. You can see people using soybean oils. You can see them using waste oils, fats, oils, and greases. As fogs is the normal connotation. These things can cost $1,500 a ton. We've seen them as high as $2,000 a ton. Waste wood was so attractive because you're looking at $150 a ton, like game
Okay.
changing lower. Hexas comes in at half of those costs, half of those costs, right? So we have literally by far the lowest cost, sustainable, predictable, consistent feedstock, which
Okay.
is which is the breakthrough. Then we produce cellulosic ethanol the same way that the corn industry produces corn ethanol. It's molecularly identical. Our feedstock cost is much lower than corn, and we get higher RINs because our carbon impact score is 1510. With Hexas, it could be 0. So lowest impact score means higher revenue on the RIN. And then the real claim to fame is we then, from that same feedstock, that same ton of wood, right, we then produce renewable diesel, renewable gasoline, sustainable aviation fuels, right? So the yield is what overwhelms, the alternative models and the competitive analysis, because we can get, the industry can get, 40, 45 gasoline gallon equivalents from a ton of waste wood, right? In our optimal scenarios, like we're over 100, it's
Yeah.
double, right? The yields. So you get much more revenue, higher revenue per gallon, more gallons in total, lower feedstock cost, and
Okay.
sustainably so. That's the thesis. And I think
Sure.
with
And if you were to turn that into napkin math, because these are also very high capex projects, so if you were
yeah.
to do a commercial ready biorefinery, how much capex would it need to be invested? What would be the annual revenues and the
So
normalized margin on that?
yeah, so it's I can profile the notion for you very well, okay? It's in
Yeah,
development still, right? So let
sure,
me
of
let
course.
me let me excuse me, let me use an analogy to
Bless you.
metals, right? So Fortunato spent a couple of years piloting, the activities that we are using now. Okay, then we spent together with him 2.5 years with we call it commercial demonstration scale. Okay, now we're building industry scale. In TRL terms, commercial demonstration scale is TRL 7, right? Piloting is TRL 6. You get to a fully functional pilot, you're TRL 6, which means you've proven the technical and economic feasibility. 7 is taking that proven feasibility, you now commercialize it with customers and suppliers. You may or may not make money at that scale, right? But you don't want to scale, as we talked about before, more than
Of course.
20 to 25 times. Okay, then we're going 20 times X from that. Okay, now if you do the analogy to Bioleum, they're working on that TRL 6. So the difference is that most of the pieces of this technology are mature, right? It's the lignin to oil, it's the lignin to oil that is our newest piece coming from Renfuel, but then integrating it all together. So we would argue, some people would argue we wouldn't, that we're higher than TRL 6 because our digesters come from the pulp and paper industry. They've been used for 100 years, blah, 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 right? There's a lot of maturity. Hydrocracking oil is the same as everybody else does it. Producing ethanol is the same process. Enzymatic fermentation, it's standard in the industry. That the ethanol side of our equation would look the same as the corn ethanol facility. But to answer your question, right? Right now we want to build that TRL6,
Okay.
fully integrated. Then the TRL7, which is the commercial demonstration, which fortunately we ran for 2.5 years. That is 250 million. Not
Okay.
2.5 million like we did in metals.
Yeah, yeah, yeah.
250 million. Okay. And then going from 250 million, you could easily go to a billion two of
Okay.
a million ton a year biorefinery that's producing 100+ million, gallons of fuel. The profile of those facilities is, 700, 800, $1 billion of revenue, depending on oil prices, one facility, and a couple hundred million, of profit. That is the highest level sketch of what we're looking at. It all needs
Okay.
to be proven diligently,
Yeah.
properly, exactly the way we did it with metals.
Okay.
Right.
Perfect.
Now you can see, because of the CapEx differences, because of the lead time differences, why it made some sense to separate the two businesses. They're very,
Absolutely.
very, very different. The innovation process, the scaling process is the same. Very different tech, very different equipment, very different capital profile.
Absolutely.
Same
What's the
differentiation in that no one else in the industry that we see can do that. Fully integrated, from feedstock to fuel, from farm to fuel.
Yeah, I agree. What's the current status of the $152 million Oklahoma private activity bonds?
Oklahoma has been so, they're so aggressively supporting us, wanting us to come. So that allocation, it's actually higher now. I think it's 160 or 170 million that's been allocated for us. That is to build that 250 million
Yeah.
facility. Okay, so the status is it's been allocated to us. It's not been repealed. It would have to be rolled over if we don't use it in the time, but we don't see any problem with that. But we're not ready yet to build that facility is the real point. We're not ready yet to build a facility. We got to build the smaller facility first before we scale up to the bigger facility. That's where we see the most frequent mistakes in this industry, right? Where people jump a level and go to the industry scale before they do the commercial demonstration scale, and we don't, or before they do the pilot scale. Even in metal extraction, right? We're doing a 1 ton a day pilot scale before we do 25 ton a day bigger scale before we go to industry scale.
Okay, awesome. Then there was in the last quarter a $16 million impairment for a tech that it's deemed no longer relevant.
Yeah.
What is the current tech that remains essential, and does this tech have any litigation risk?
No. So the core tech, is, we call it the organosolve, where we're taking solvent-based, we digest the woody biomass using a solvent that allows us to fractionalize it, right? And then move forward down the cellulosic path versus the lignin path. And so that organosolve technology is foundational, to what
That
we
was
do.
developed by Renfield and acquired by us, right?
No. So the organosolve was acquired, in the first round,
Okay.
of Comstock. Then we acquired Renfuel on top of that. Then we acquired Hexus on top of that. And
Okay.
we are working on breakthrough advancements with, MIT and the National Renewable Energy Lab, to further advance that foundational technology. The technologies that we impaired were all additional to that. Like we
Okay.
acquired a lot of IP that we have, and there's there could be efficacy for a lot of it. But with some of the founders leaving, we didn't see any scenario in
Can
the
you
near
can you
term
repeat
where
that?
we would be
Can you
investing
repeat?
capital.
Sorry, can you repeat that? You
Yeah.
were breaking out. You said you acquired a lot of IP, and then?
Yeah, as part of the original transaction, in addition to the foundational organosolve patents, which are significant, vast,
Hmm.
right? We acquired a lot of additional IP. Some of it's, um, almost, I think the common theme of it is it's typically something that relates to some decarbonizing technology or solution, but in a vast array of fields. Okay, and
Okay.
it's all perspective, and frankly, with the focus, the absolute laser focus on what we're doing, we just concluded with some of those folks leaving that we wouldn't it's not foreseeable to us that we would ever invest any development capital into those. Now, could we license that tech? Could we sell it? Absolutely, right?
Okay.
But what we don't have any plans to develop it and use it, which then was a trigger for impairment. Like if we're not intending to use this asset, then why do we leave the
Sure.
value on the balance sheet? So we cleaned it up. I actually felt good about cleaning it up. I understand how it's a
Yeah.
surprise. People didn't understand it was coming. But it's not, it doesn't implicate the business, the core business in any way, shape, or form.
Okay. Awesome. Then, under what scenario would you pull the plug on Bioleum? And what would liquidation value be at that point?
So Hexas alone will be commercializing its feedstock, number one. Hexas alone has revenue opportunities. They're actually global, from Hawaii to Arkansas to Africa to Australia. I mean, absolutely real counterparties, real engagements. If they fund the planting of a farm, for example, can they use that feedstock for X purpose, A purpose, B purpose, C purpose, X purpose? The answer is yes, right? Hexas alone could be a business that would significantly overwhelm like the investments that we've made to date. So, and we don't see any technology risk there. There's no development. We just need to deploy and scale it, right? It's deployable and scalable today. We need to deploy and scale it, okay? So on the question, if we were, what would liquidation value be, or, what pulling the plug? Like, I think that if you look at the core of our operation in Madison, Wisconsin, right? They also have customers wanting to buy materials from those facilities now. Okay, so we're deploying to get to that TRL6 feasibility, right? We just need to show the outside world we could take the feedstock and make the oils in one integrated way, like I said, we did with metals. But if we didn't want to do that, then someone would buy that. Like I don't, you know what I mean? Like it's just too
Okay.
close. It's too close to commercialization. There's too much industry, interest, and we're engaged with that interest. Right now, we're engaged with that interest to commercialize, to sell, or to partner, to get to the finish line. But there would be other options, and
Okay.
especially now that it's very, very focused today.
Absolutely. I mean, I don't want to say that there's no value here. I mean, Bioleum is a business that attracted a 325 million term sheet in
Yeah,
24,
yeah,
700 million valuation from Marathon Petroleum, and like a billion valuation from third-party investors.
yeah.
I
No,
just
it's
wanted to get I wanted to get the worst case in front of people and move
and
past
I, gue-
it.
and I guess I guess the good answer to that is, from Comstock investors, we sit at the top of the capital stack with liquidation preference. Okay, so
Hmm.
if we did liquidate, we would expect to recover our $65 million, for sure. But like that's not really our mindset.
Okay.
But it is good to know. It is good to
Yeah,
consider. You know,
absolutely. Okay,
we
great.
believe we have something very differentiated.
Awesome, awesome to hear. I just wanted to address the worst case scenario in Bioleum. I know the upside is huge, but great to address the worst case scenario and move past it, which takes me to my next point, which is complexity. I mean,
Yeah, yeah, yeah.
investors usually tend to gravitate to simpler business where they can explain them in simple terms and shy away from complexity. Comstock has quite a long history and particularly a complex one. You used to be a silver miner, then you did environmental technologies, you're now developing real estate while ramping up a solar panel recycling. So maybe for the newer investor here, what would you tell them? How did we come to this particular moment? Where are we going? And in particular the capital allocation strategies, and how is Comstock's equity capital being allocated from here on out?
Yeah, no, that's a great question. So, first of all, our hard rock mining background, it was extraordinarily successful in consolidating, an entire mineral district, permitting it, putting into production. A lot of that has to do with land use, ordinances, master plan zonings, but also infrastructurally, metallurgically, mining ore and producing silver and gold, which we did. So that you can call that foundational. My background is, and Fortunato's background especially, is more on industrial materials and, more global management of materials, and in both cases renewable. Taking waste from the oil and gas industry, making the carbon into graphite, or taking waste munitions and repurposing those materials which are hazardous. That's our background. So the evolution into metals was very natural, foundationally our core competencies together, and made all the sense. So we're selling the mining assets. The mining business is imminently going to close. We had $31 million in the bank on June 30. We'll add another $20 million, this month. If it's August 1st, it's now, right? It's going to happen imminently. So that's not only a liquidity point, it's a simplification point, and it's a very major simplification point, because mining has complexities with permits and environment, and that's all gone. And the liabilities on our balance sheet associated with that gone, and the annual cost, not so dramatic, but $1.5 million gone, right? So we simplify, we restore capacity, we increase focus. The Sierra Springs Opportunity Fund was an evolution of that real estate competency, the platform, getting permits, getting entitlements, getting approvals. We just have a very, very, very strong relationship in Northern Nevada at the state level, politically, at the state level, regulatorily, and at the county levels, which is most critical. So all of our properties are in the same counties. We're not diversifying that notion, but most importantly, right, we're monetizing it. So you have mining assets that you're immediately turning into cash. You have real estate assets that you're intermediately turning into cash, and then simply, we're an industrial metals business that's highly focused and growing rapidly. Bioleum is also a renewable business, but we're going to fund it and capitalize it with third parties to the point that they're independent. That could become an IPO. That could become a full and complete spin out, right? So the capital solution is the last piece to making that go. We thought we were already there. We have a little bit more to go. But then we're an industrial metal company with extraordinarily differentiated business plan, which also, again, is the same thing as Bioleum. We don't see anybody that can match the supply chain and the technology that's been put together for that solution. It meets the sufficiency of the market's problem. We start everything with what's the market's problem that other people can't meet. We're not in any business that someone else is capable of meeting the solution yet, right? So with solar panels, it's got to be not only the efficiency, the speed, and the effectiveness of reselling all those materials. You have to do it at scale. Because the problem is 1 billion deployed solar panels, not 1 million, right? So you have to be able to do millions of panels a year from one production line.
That's great. And it's great to hear that you're monetizing profitably mining assets imminently, the real estate intermediately.
Yes.
but maybe a concern for people is like a profitable asset can fail to compound per share if cash is directed to more unproven projects, or if equity is raised even faster than the intrinsic value grows.
Yeah.
And some people might be here looking and seeing outstanding shares went from 12 million to 70 million plus today, and they might be worried about non-stop dilution. What
Yeah.
would your comments on that be, and particularly, what's your mandate to compound per share growth going forward now?
Yeah.
Maybe
Great.
giving some background here, like we already saw that the institutional backing of the company has changed dramatically in the last couple of months. Hood River Capital owns 8% of the company, Mac Capital owns
Yeah.
another 8%,
Yeah.
directors own 2, 3, 4%,
Yeah.
5%. So the alignment and the institutional backing and probably the mandate that you're giving has changed and has become a little bit more rigorous, but
Yeah.
want you to
Yeah.
comment on that.
Yeah, I don't know if more rigorous is the way I'd say it, but it's
Okay.
valid. Let me say it this way. Okay. First of all, it was a year ago in August of 25, right? And well, let's go back 18 months. Let's say January of 25, right? Shareholder letter where I said, we have two businesses that are now exceeding our expectations in terms of what they're capable of doing. They're absolutely differentiated, right? And they're moving forward, especially metals. Okay, they're unique in their technology, they're unique in their sustainability, right? And they're unique in their differentiation across the whole supply chain. But we're undercapitalized, right? We are undercapitalized. And so if you want to say, how did we get there? A junior mining company who invested in two renewable technologies and some peripheral real estate that was adjacent or almost adjacent to our platform, you know, really, there's two ways to look at it. You perpetually diluted for 5 years, or how did you achieve so much with so little? Okay, they're both true, right? The dilution was dramatic, and we created two businesses, almost from scratch. Okay, so while preserving these two real estate platforms, one mining and one industrial, preserving. Okay, so look, no one would go into this plan and say, let's do that way, right? We inherited, the assets that we had. We had to stop the mining, and then we embarked to do something more meaningful. But in January, we came out and said, look, we're undercapitalized. We need to fix this. We need to fix it once and for all. We need to fix it the right way. Okay, and that led to more professional institutions, more professional banking, and a proper capitalization of the company. So since August of last year, and we did raise more because we expanded and accelerated the thesis with metals, plus a little bit more capital to be able to position SSOF for monetization, right? But it's not our notion. It's our notion to deploy these capitals for faster returns, right? Be it sale of mining asset, sale of real estate asset, profitability of a metals business, right? And then ultimately, Bioleum is standalone. Ultimately, right, it's capitalized on its own. Doesn't mean we wouldn't have an ownership in it. It just means we're not deploying the capital to it. And the reason we're not is not because we don't think it's a good investment. It's because metal recycling is better.
Yeah.
Metal recycling is faster, less capital, faster throughput, higher returns, huge market. So unless we cornered and own that whole market and we're printing money, right, we shouldn't be thinking about other things.
Our cost of capital is too high having that kind of business
Exactly,
available to
exactly.
us.
So,
Yeah.
so that's it, and I don't, we bear the burden of that history, okay? But if people understood better how we got from point A to point B, they wouldn't see mavericks. They wouldn't see perpetual diluters. They wouldn't see irresponsible capital.
Yeah.
Nobody's perfect. We made some investments that didn't work out. We started with lithium-ion batteries. We pivoted to solar panels. Like with hindsight, that was the best decision we've ever made, right? Demonstrating the ability to say, look, we've put 6-7 million into this thing. It's not what we thought it was going to be, but this thing is what we thought, and we pivoted. Okay,
I agree.
and that so we're just being frank. We're just being real. We don't want to dance around it. But if someone's just is an analyst who pulls up the screen and looks at the last 7 years, they don't know how we got here. Then they don't know us. Those people should not invest, right? If they don't know, they
Absolutely.
should get to
Know
know
what
us.
you
They
own,
should
for
come
sure.
in and visit us, meet us, see the assets, see the operations, understand the history. Then I think it's a stronger, it's a more keen alignment.
Absolutely.
And
Absolutely.
we have to execute. Like none of what I said matters if we don't execute what's right in front of us. We have to
So
close the mining
let's,
deal. We have to get the big machine up and running and turn profitable at 25% utilization and then grow it from there. And we have to monetize SSOF one way or another, right? But we don't want to be deploying capital. We want to be pulling capital from that source.
I think you just answered my closing question, but I wanted to ask what
Right.
would be the two, three public facts that people should use to judge execution by year end on Comstock?
I would say one for sure, close the mining deal. That's a layup for me, but like it's
Yeah.
important for everybody. It's important. Okay. Number two, let's see a video of feeding the solar panel in the front end of the machine and see materials coming out of the back end. Okay. That's,
Okay.
that's also coming soon, very soon. We could not be happier with the way all of this has amalgamated and come together for metals. We got the big machine, we got the glass upgrading, we got all the storage, we've got two other sites, and we've got the metal extraction developing, forward. Okay, so those news plus some new customers will be very good for people to be hearing from us. Third, that we're launching, the effort to monetize SSOF, and we don't know what form that can take. Could someone just show up and buy the whole thing? Yes. Could someone show up and buy parts of it? Yes. Could someone show up and buy most of it and want us to stay on with a part of it? Yeah. We don't know, right? But we do know something. There's massive demand. Massive. I mean, despite the market volatilities, we can tell you we're talking to big people and they're all big and they're all talking to us. So that our effort up until now, let's just be specific, right, Lucas? Why aren't you selling this thing now? Most people don't understand that until 3 weeks ago, we didn't own all the lands, right?
Yeah.
We had a purchase option. So 3 weeks ago, 4 weeks ago, we closed on a purchase option and now we own 2,500 acres. We own it.
But you have to add that this purchase option, you've entered into it in 2017 or 2019, because maybe some
2019,
skeptical
yeah.
people will say, hey, you will flip a land from 1 week to another and make 500% returns. That's not the case. You've invested
Not
in these purchase options like almost a decade
2019.
ago. So
Exactly.
yeah,
Thank you for
2019.
highlighting.
Okay.
We secured in 2019 at ridiculously low prices. Okay. That
And that's
money,
the purchase option you executed on 7
that's
years
right.
later
And
on
Comstock was not
2019
willing.
terms.
Comstock
Yeah.
was not willing to put in tens of millions unless the land was going to be owned and the power source was identified and secured, right? Like Comstock's thinking minimum sufficiency. Oh, of course it has huge potential, but until you have the ownership, you have the water rights, you have the power source, it's still too
Yeah.
risky. Okay, now we have all those things. Now we're pulling that all together, and now we can go out and market something that we believe meets minimum sufficiencies, right? In other words, it checks the box of all the due diligence of major institutions whose all they've done for at least a decade is site select and build these infrastructures. So we're dealing with sophisticated counterparts. We know what they need, and we know how to make sure we have what they need. But it's a lot of work. It's not. You're right. It's not a flip. It's not
No.
also put a for
Yeah.
sale sign on the building and wait for somebody to buy it. You have to collaborate and get them to the finish line.
So with regards to a public fact that people can measure you against by year end with SSOF, what would you say? Because it's not an outright sale. So how would you
It could
measure,
be an outright.
as
It
an
could be.
outsider, how we can measure progress on SSOF?
Yeah, I would say it could be an outright sale, but
Yeah.
before year end, some defined transaction with some derivable value of that, like let people start to understand, okay, there is going to be a transaction and this is the value of that transaction. Will it be
Okay.
closed? Probably not, but it will be hopefully known, right? It'll be
Okay.
known. Yeah.
Okay. That's awesome. Well, thank you, Corrado. I mean, super excited for the future of Comstock. And again, thank you for your time. Hopefully
Pleasure.
this helps
Always.
people understand the story better.
Thank you,
Looking
Lucas.
forward to
Great.
keeping catching up.
Absolutely.